So a couple of things that work together. This decentralized decision-making, given our ability to impact internal communications within the government. And then there are a couple of hundred small sites along the Iranian coast where people have the capacity to interrupt shipping in the Gulf, whether it's through putting mines in or sending off small drones.
Right.
And that really makes the job very difficult.
I mean, you helped build out Yemen's ability to do hydrocarbons. You've driven many of those roads. I read yesterday as an amateur of 3 Independence-class minesweeper military boats in Bahrain for the U.S. Army, and all of it's U.S. Navy, I should say. And it all sounds like it's going to take days and weeks to get a path through the Gulf of Hormuz. Are you looking at days and weeks, or dare I say months, to open up the Gulf?
Well, that's the uncertainty. We don't know whether it's days or weeks or whether it's months. And we don't know whether that months will turn into a kind of permanent damage because there's a regime in place and it doesn't look like it's going to roll over overnight. So it is a big uncertainty. I say the probabilities are higher that it's sooner rather than later. But by sooner, I don't mean the end of this month. I mean sometime within the next month.
We know that the IEA is now tapping these reserves, right? The member countries agreeing yesterday unanimously to do this. The U.S. is going to kick in 172 million barrels. But you know what? It didn't do much for the oil markets and for the price of oil. Why is that? Why didn't it appease them?
Well, look at what's happening. They're putting maybe 4 million barrels a day into the market for a limited number of days. And the world is already seeing 2 things happening. One is that the upwards of 16, 18 million barrels a day that was coming through the Strait of Hormuz is now down to 10. So we're not replacing, and the longer the time waits, the less important that little drop in the bucket may be.
And it's important to mention, it's not that we don't have the oil. We're still flush with oil. We just have nowhere to store the oil. Is that really the problem?
No, the problem is that we have the oil. We have an open market. We allow our oil to be exported to whichever country or party other than those sanctions that want it.
Right.
This is true of gasoline and ethane and all of the product line, and it's true of crude oil. So if you are in the need of crude oil, you're going to go to the U.S. to ask for it and bidding up the price. So although we're the largest exporter of crude and product in the world, we're the largest producer
Right.
of that and natural gas, we are beholden to the global market.
Edward Morse with us, folks, Senior Advisor, Hartree Partners. We welcome all of you on YouTube and all of our other ways to listen to us around the world. Subscribe to Bloomberg Podcast. A good conversation here with Dr. Morse. Okay, my knowledge of this is I rewatched Lawrence of Arabia 3 times. I read most of Dan Yergin's Surprise. I think most of it. Okay, I read Albert Harani on the Arab people and that. What are they thinking in Riyadh right now? The royal family of the Saudis, the royal family at Qatar, the Zayeds, the Maktoums in Dubai. What are these royal families thinking?
I must intrude in this a little bit to note that Dan Yergin and I have been very good friends since we were in graduate school. And I had the pleasure of reading the original manuscript to give him feedback.
What was that like?
That was double the size of the printed version, so it took a little bit of time.
Wow.
I mean, we used to, John Tucker remembers this, Ed Morse, we used to walk around with the prize paperback. It was like a girl magnet. It was just like to be cool.
You didn't read it. You just
What was it like
people.
when you first read an absolutely definitive book?
Well, the history that he did was just truly extraordinary. So it became the one place to go if you want to understand where oil markets came from and where they're going.
Okay, but folks, in all my travels over there, you do background reading and that. Thank you to the University of Durham in England for definitive work. The first Mercedes dealership in Abu Dhabi, there were no roads. They're driving the Mercedes around in the sands. The tribal structure that Alfred Harani wrote about definitively in one volume. Ed Morse and how these royal families are responding to Persia.
Well, they're responding in the longer term and the short run. So, people had been saying that nobody in the Gulf wanted the U.S. to do this. That's absolutely untrue. There are significant reports that indicate that members of the royal families of a lot of those countries were encouraging the U.S. to do what it did. So that's one element. They were sitting, quietly and not in front of a microphone, but but actually encouraging the U.S. to do what they were doing. They are different in terms of their structure. So we've got two big countries, Saudi Arabia and the UAE, that either have diversified their economies a lot or are in the process of diversifying. And the intriguing thing on the Saudi side is that just in the month of January, they gave signals that they were going back and looking at the original 2030 plan, and they're finding ways to accelerate the diversification of the economy. They're doing it by going into critical minerals, mining other things at home, going into AI for the world, and attracting investment from the private sector in a way they never have. So, they're happy and unhappy about what's happened over the last month, but they're happy to see the decapitation of the regime, the reduction in the authority and the power of the central government, and they're hopeful about change over time.
Dr. Morse, I want to go back to something you said earlier in the conversation, that there could be permanent damage to the Strait of Hormuz. We see this unprecedented attack on just sort of the infrastructure of the strait. What would that look like? What would permanent damage to the strait look like?
Well, by permanent, I meant something going forward where we already know that the Iranians have restricted lanes of the Gulf for transit. They're allowing a number of sanctioned vessels to go through. They've increased their own exports. But given the number of weapons they have on the coast, given the nature of those weapons to intrude and interrupt transit through the strait, this is a long-term threat. It's not something that's going to be over, even if there's a truce.
Good morning, 92.9 FM up in Boston. Jay's up there. He's clipping coupons. He's just a municipal bond guy. But he sends in a really smart question. Can you ask Dr. Morse what we're going to do with Karg Island? It's not like Love Island. This is a little island right off the coast of Iran, directly east of Kuwait. Have you been there, Dr. Morse?
Yes.
You've been to Karg Island?
Yes.
This is great. I mean,
it's the only person I know who's ever been there.
There's not like a Four Seasons or a Marriott at the end of it, is there?
No, my Iran travels are really remarkable. I'll never write a memoir, but I was the first American delegation back to Iran after the revolution.
Right.
And when I was there, I had a classmate from graduate school who was a head of intelligence in the British Embassy. I had an escorted ride from the U.S. Embassy where I was staying to the British Embassy. I was actually co-chair of the U.S.-Iranian Bilateral Energy Working Group.
Right.
And when I was with the British ambassador and my friend, our car was attacked on the street. We had to run out, escape, and the car was rolled over.
Did you return the fire?
I just got as anonymous as I could in the crowd.
I think you should write a memoir.
Well, of course. The simplistic idea here is if we really are at war, why aren't we taking out their immense undersea pipelines and refinery capacity out of this little island east of Kuwait?
Well, you'll note that the Israelis have attacked some of the infrastructure. So that's been a threat that more of the infrastructure could be attacked. And we don't know what the president's going to do between now.
Would you recommend to the president that he take out their major refining hub?
Well, I think there's a lesson to be learned, given that the Iranians have taken out other hubs and other refineries and are now attacking oil fields. So you shouldn't do that unless you expect the same in return.
Yeah.
The president hasn't done it, of course, because he's not interested in a significantly higher oil price environment. Whether his interest is for the midterm elections this year or something more durable is another question. But, he'd really like to see gasoline prices significantly lower. He now can't brag that gasoline prices are lower than they were since Biden, because they're now higher than the last year of the Biden administration.
Yeah, they're higher than both of his administrations, Trump's administration.
And they're going to be higher yet because there's a lag effect between the crude price and where the
What's your
product
modeled price on Brent crude? Can you get it out to 120?
I think it's easy to get it out to 120. We're in a world of unbelievable volatility in this market. We have seen witness to that in terms of going down and going up. Murban is pricing at 100 and Dubai are pricing at 117, 118. And that's going to go higher because the longer those crudes can't get into global market, the higher the price is going to be. And I think you can reasonably think that on a supply-demand basis, unless there's an economic repercussion in which demand collapses, we are more likely than not to see prices above 120.
Dr. Morse, help us understand how the U.S. was able to escort ships through the Red Sea with the Houthis, but they, even though Trump has said, we're going to do it here, we're going to do it here with the Strait, they haven't yet. Why?
The Houthis didn't have the ability to mine the Red Sea. The Houthis were more limited, and the Houthis were more interested in, remember, they're a proxy, and they're a proxy that has an independent status within Yemen itself. So what have we heard from the Houthis lately? You know, they've been unbelievably quiet. The best way to track them is Al Jazeera does a daily report on what the Houthis are up to, but so far they've done nothing to interrupt the safety line that the Saudis have. The Saudis have the Yanbu pipeline. That is a 7 million barrel a day pipeline now, and that includes crude and product. That could be interrupted, but the Houthis haven't moved on it.
Edward Morse with us, and we continue with Dr. Morse here, a spirited conversation with a gentleman who owns the high ground on our geopolitics of hydrocarbons. His work for decades at Citigroup, at the Council on Foreign Relations, and now at Hartree Partners. Alexis Christoforous with Dr. Morse.
You know, can you just explain for us and connect these dots? Because I always thought, well, it's going to take a little while. There is this trickle-down effect. If crude oil goes higher, you don't feel it at the gas pump instantaneously. Here, I feel like prices really have gone up overnight. What is that about?
That's about what the market could see immediately. We are in a world in which inventories have been replenished to some degree, but they're lower than the 5-year average. In a world where people in the market buy when they think there might be a crisis. So people are filling their cars up more often than they have in the past.
So a little bit of hoarding going on.
A little bit of hoarding, but basically it's the two things. One, it's the price of crude is going up, so the cost of all of those products are going up. And the other is, for technical reasons, they're going to go up higher at a faster rate and a higher rate percentage-wise than the crude, and that has to do with the inability to get the right crude in the right place to produce the right product. So we're going to see more product inflation today. It's only about half of the increase so far in where crude has been.
Tell us about, for example, Indonesia and subsidies to their people on energy, or Egypt and their subsidies to their people on energy. All of that is disrupted. How do those... I mean, we have Gita Gopinath with us of Harvard here coming up. Is it going to be one big cash ask of the IMF because these countries can't continue their subsidies?
It's going to be a bunch of different asks of the IMF. And these countries, some of them have more protection than you'd think.
Right.
So you look at China to begin with. China has lost 38%. In practice, 38% of its supply, almost 40% comes from the Middle East. And they are really vulnerable to that. Yes, they've got the largest stockpile in the world. And what have they done? They have banned the export of critical products in order to make sure that they have it at home. Japan is going to be doing the same thing, Korea the same thing. So we're going to be seeing a more critical loss of product because of what's happening in China, India, Indonesia. Egypt's a different question to a significant degree. Egypt's got production of oil, it's got production of nat gas, it's got LNG coming from the United States, it's got gas coming from Israel. So it's, they have price controls and their economy is a mess. But I'd say the emerging markets of the world are in deep trouble.